Alright guys, welcome back. Today let's take a look at the superstar on Chinese stock market, Kweichow Moutai. First, let's apply Warren Buffett's mentor Benjamin Graham's stock picking criteria listed in the Intelligent Investor to evaluate this company. The first criterion is adequate size. Moutai's market capital is 1,800 billion Chinese yuan, ranked number 1 in the baijiu or high-end liquor industry in China. Its annual revenue is 170 billion Chinese yuan. The size is pretty huge. Number 2 is strong financials. Moutai's current ratio is 4.2. Working capital is over 400 times of its long-term debt, so its financials are super solid. Number 3 is earnings stability. Moutai has been profitable for 27 consecutive years, meeting Ban's requirement. Number 4 is dividend record. Moutai has paid out dividend for 24 consecutive years, also meeting the requirement. Number 5 is earnings growth. In the past 10 years, Moutai has achieved 280% earnings growth, much better than the required 33%. Number 7 is moderate price to earning. Moutai's past 3-year average PE is 29, not meeting the less than 15 requirement. Number 7 is moderate price to assets. Moutai's current price to book value is 7. This one is also not passing. So we can see that among the 7 criteria, Moutai is not meeting the moderate price to earning and the moderate price to assets requirements. Next, let's calculate its intrinsic value. The way I normally calculate a company's intrinsic value is by adding up its current liquidation value with the next 10 years of total dividend. However, for a company that we are certain that it can live and run business for much longer than 10 years, I'm using 15 years of total dividend. And Moutai is one of those companies. If we assume it can sustain an ultra-high annual growth rate, its intrinsic value is 1,830 yuan per share. If the annual growth rate is 5%, the intrinsic value is 1,040 yuan per share. If it has no growth, then the intrinsic value is 490 yuan per share. If it's declining, its intrinsic value is 310 yuan per share. As a superstar on the Chinese stock market, you can hardly pick out any flaw on this stock. Its profit margin, growth record, dividend record, financial condition, and the company's moat are all top of the line. Baijiu is a unique and well-regarded symbol of Chinese culture, and Moutai is the top 1 brand. The very appearance of Moutai on the dinner table shows tremendous respect to the guests. Also similar to wine, the longer you store baijiu, the higher value it has. In the long run, I think Moutai's business will continue to grow. I estimate its annual growth rate is between 5 to 10%, corresponding to intrinsic value of around 1,400 yuan per share. I hope you like this analysis. What do you think about the company Moutai? Or do you have any questions? Please leave a comment. I will see you guys later.